Hello, everyone. Tony here. US stock markets rallied on Friday, locking in a second consecutive week of gains. And the rally was fueled by strong economic data and the potential easing of trade tensions between the US and China. Friday's non farm payrolls report was robust. We did see the US economy add 177,000 jobs in April, and the unemployment rate remained steady at 4.2%. If it wasn't for a rise in the participation rate, the actual unemployment rate would have fallen to 4%. Now, the resilient labour market data alleviates worries about an economic slowdown for now and bolsters confidence in the Fed's ability to remain on the sidelines to see if there will be a meaningful deterioration in the hard data or a rise in inflation. Attention this week will focus on potential tariff negotiations between the US and China and the Fed's interest rate decision. Now, we are looking for the Fed to keep rates on hold there at 4.25% to 4.5%. Investors will also closely watch for the continuation of quarter one earning reports, and we have companies scheduled to report this week, including Ford, AMD, Walt Disney, and Uber. Let's take a look at the charts of the S&P 500 and the NASDAQ to see where they are as we start this new week. Okay, so in our last update, we mentioned that the rally was pushing the limits of our bearish short-term Elliott wave count, and it has continued to do so. In fact, while we are now seeing some more confusing signals, is that the rally that you can see from this April the 7th low has unfolded in three waves, which you can see here, wave one, wave two, or wave three. Now, that has followed a three-wave decline. It's quite clear there. You've got your wave one, your wave two, and your wave three. And it certainly convolutes the picture through an Elliott wave lens. So what we do in default of this is we go back to our 200-day moving average. And you can see that the NASDAQ tested that 200-day moving average on Friday night. It went past there by just a pip. So the 200-day moving average sitting at 20,176 currently. Now, while the NASDAQ remains below this 200-day moving average, and then if it was to fall back below this wave one or wave A high, I suspect it probably signals we're coming back down to this area here, a retest of the April lows. However, if we get above this 200-day moving average on a sustained basis, I suspect what we are seeing is a completion of this correction and that the uptrend is set to resume. So right here, right now, it is a hugely important week. We need to see how the NASDAQ reacts with regards to this 200-day moving average. And it's a very similar story in the S&P 500. Again, we've got a three-wave decline from its 61.47 record high. And then you've got a three-wave rally up towards Friday's 5,700 low, which again makes things very convoluted through an Elliott wave framework. And when it gets confusing through an Elliott wave framework, I generally push it aside and look at other indicators. And the favorite indicator of mine, as you know, is this 200-day moving average. That's coming in around 57.46. So while the S&P remains below 57.50-ish, I suspect there's still a chance of a downturn. And my view of that would increase if it started to fall below this 54.80 high we saw there on the 9th of April and below this low we saw over here around 54.33. If we saw this start to occur, then I think you would probably feel more confident with the view that we have topped and that we're pushing for a retest of this April the 7th low. Conversely, if the S&P 500 can push above this 200-day moving average and really start to build some acceptance above this 200-day moving average, I don't think we've got a choice other than to go with the view that this was a three-wave corrective pullback within a bull market and that the uptrend has resumed. But in a nutshell, things are very, very finely balanced as we start this week. We're going to know whether we reject this 200-day moving average in the NASDAQ and the S&P, or we see some acceptance above there. Now, we also need to keep in mind that May is seasonally a tricky month for May. So at this point of time, I'm still willing to give this down move the benefit of the doubt, but we need the market to provide us with some confirmation that this is going to play out. Thank you for listening and have a great week ahead.